Hi, my friend, Caleb Johnson here, and I have a huge question to ask you, real estate investors. How would you rate your level of personal discipline on a scale of 1 to 10? If your answer is anything less than a 10, I've got something neat for you. And let me tell you, discipline means pushing yourself beyond your comfort zone and doing things that are difficult and sometimes boring. Achieving massive success requires you to do those difficult things. Building your levels of personal discipline is not easy, but it does pay off. In fact, you can't achieve anything significant without discipline. Now, I just released a program for investors where I walk with you as an accountability coach to aid you stay on track so you can push yourself to do the hard things that greatness is going to require of you. Starting is easy. Go to redccapitalgroup.com and click accountability coaching at the top right of the screen. So let's get to work, and now to the interview. Welcome back, everyone. My name is Caleb Johnson, host of From Trial to Triumph. Today, we're just going to get right into it. Our guest owns and operates apartment buildings. He's the director of a multifamily education community. He's a fund manager. He hosts a podcast, and they are actually coming up on their 400th episode. So that's really cool and amazing. So, Brian Briscoe, welcome to the show.
Hey, thanks, Caleb. Appreciate it, man.
Yeah, thanks for being here. Well, can you go ahead and give our listeners just a quick background story about yourself?
Yeah, so I think best place to start, I'm always wearing something red with a Utah logo on it. Somebody just pointed that out to me earlier today. I was born and raised in Salt Lake City, went to the University of Utah, got 2 degrees, bachelor's and master's in math there, and I wanted to be a college professor. I was on the go to school, get a good job program, and to get the job I wanted, I needed a PhD. And so I started looking at PhD programs. I went to the University of Minnesota, and long story short, first month there, September 11th, 2001. All right. And so I decided to put PhD on hold. I originally intended on, returning to PhD studies, but that never happened. But I put my PhD on hold and went active duty with the Marine Corps. So that was something that really changed the trajectory of my life, and it's hard to give a good idea of who I am and where I've been and come from without including that moment. But along the way, I think, a couple of years into my military service, I read the Rich Dad, Poor Dad book, Cash Flow Quadrant, and, it really changed how I started thinking about money. I had a ton of limiting beliefs at the time. For example, in Cash Flow Quadrant and Rich Dad, Poor Dad, he talks about a lot of different investment types. He talks about like venture capital type investments. He talks about multifamily specifically and commercial real estate. And I remember reading that and thinking, man, I can't do any of that he's talking about, but I can probably figure out how to buy a single family. All right. And so that's what I did. I bought a couple single family homes, and my plan was to buy as many single family homes as I could. And anyway, over time, other things got in the way, and, certain lenders didn't like lending to me for one reason or another. I only made so much money, and you can only have so many single family loans and whatnot. But I got to the point to where I wanted to start scaling. I wanted to go from, what I call being a real estate hobbyist to a real estate business. So started researching how to scale, how to add to my portfolio quicker and, bring more units on faster. And the obvious answer for me was apartments. It's roughly the same thing. You buy a place, you put a tenant in, the tenant pays rent, and you collect everything that's above your expenses, right? So, roughly the same business plan, just you're able to scale a lot quicker. So, started doing that, and realized really quickly that even though the concept is the same, the mechanics are different. And so my solution to that was fortunately a lot better than my solution was 20 years prior. My solution was, all right, I'm going to find somebody to help me, and I don't care what it takes, I'm going to find somebody to help me. So I paid a lot of money for a coaching program, and I got exactly what I was looking for. The help that I needed to go from single family to multifamily. Um, Within a year of starting the coaching program, I had closed on 3 properties, 88 units. The next year, I closed on another 5 properties, roughly 400 units, and it just kept on going from there. So, 4 years after, starting that coaching program, and it was a 12-month long coaching program, but 4 years afterwards, right now I'm sitting on 1,100 units, and I've got another 400 under contract right now.
Okay. Brian, when you first started acquiring apartments, what year was that?
2019.
Okay. Okay. Yeah, great year to start investing. And the reason I ask is because, when I first started investing was probably 6 years ago.
Mm-hmm.
And when I first started buying apartments, though, it was about 3 years ago. So
Mm-hmm.
that was 2020, 2021. And talk about well, it was very competitive, but you could get great debt and
Mm-hmm.
there was a lot of growth. And so it was a
Yeah.
really great time to kind of buy some acquisitions as long as you weren't overextending yourself. So
I mean,
that's,
looking back at it, 2019 would have been a hard year to overextend yourself just because of, how fast the market grew in 2020 and 21, so,
mhm,
um,
you're right.
you know, had I a crystal ball, and of course I don't, but had I a crystal ball at the time, I would have bought everything I could have in 2019,
Hmm.
and I probably would have sold it in 21. But
Right.
anyway, that's all wishful thinking. So, yeah, whatever.
Yeah. Yeah. Lots of opportunities
Hmm.
in the future. So,
Yeah.
that's good. I want to talk a little bit about how you first started investing and you had the limiting belief that apartments was too big or too difficult
Yeah.
for you at that moment. And maybe with your job circumstances, maybe that was true. And then it sounded like you just overcame that. But I want
Mhm.
to pull that out a bit. How did you get over those limiting beliefs?
It was. I wish it was like a light bulb moment, but it was. It was a long time. Flipping a switch. I think at first, it was trying to scale. I mean, like I said, when I first read Rich Dad Poor Dad, I didn't know anybody who had ever bought an apartment building. I knew a couple of people that had single family homes as investments. So, part of it is I didn't even know where to start. Was the answer. And then I think one of the biggest things that changed my trajectory is I accidentally downloaded a book by Brandon Turner, the former Bigger Pockets guy.
Hmm.
But I accidentally downloaded a book by Brandon Turner about how he bought a 24 unit apartment. And for me, that's the first time I had ever read anything um, about apartments, and it was the first time that apartments began to be accessible for me.
Hmm.
Now, I read that book in late 2016. So it took me 2 more years to get coaching, but that was the first time that I really started thinking, you know what? Maybe I can do apartments, and so I started reading more books. Podcasts were, a lot more popular. I don't think podcasts existed the first time I listened to or I read, the Robert Kiyosaki books, but I started listening to podcasts, and the more that I listened to podcasts, the better the idea of investing in apartments sounded, the more accessible it became to me. And hearing normal people tell their stories, all of a sudden I was like, you know what? That guy's not so much different than I am. If he can do it, I can do it. And that's really where it started. And then I went out and I started trying to do it. I started calling realtors, not real, apartment brokers, but I started calling realtors up and seeing if they had any apartments, and I started touring them, and I realized that's when I realized that I needed help. That's when I realized, because they're talking about NOI, and they're talking about other things that I was just like, I have no idea what that is. But when I realized that I needed help, one of the big podcasts that I listened to offered a coaching program, and it was like, I think I signed up the day that I realized I needed help. I signed up for a coaching program. So just that quick.
Hmm. Yeah, it sounds like to me, whenever you started taking action and even kind of getting around Brandon Turner, that book
Hmm.
really kind of expanded your mindset. And then once you started taking action, it's just like a snowball effect.
Hmm.
I think so many people, they say they want to do something
Yeah.
and they just expect the deal to land at their front door or to land in their lap. And
Yeah.
you have to start taking these baby steps. And it was
Hmm.
interesting to hear that you started talking to real estate agents but now you can make the distinction that there's brokers and then there's agents, so two completely different things
Yeah.
even starting out. But yeah, just start taking baby steps towards
Hmm.
your goal, and look at
Yeah.
you now.
Yeah. And interesting, you mentioned deals falling in my lap, Um, at first that would never happen, but after several years of doing this, I'm at the point right now where occasionally deals do fall in my lap. I had one fall in my lap last week, and another potential one fall in my lap last night, just from the conversations. Part of it is mindset. Part of it is, you know, I know that I could do things and I could see opportunities. So there's, yeah, a lot of it had to do with the growth and like you said, I think some of the biggest contributing factors, and you mentioned them, taking action, start actually trying to do things and then be around other people who are doing it. Those were the two things that I think contributed to my mindset slowly changing. And, I did have a couple of instances where, my mindset grew by leaps and bounds, but, I mean, for the most part, it was, kind of a very slow change. And I think if you were to come up with an analogy of how my mind works, it's like a freight train. Okay, my mind does not pivot. My mind is like it's on the tracks. It's going a certain direction, and you really gotta put in a lot of effort to get that mind changed. But anyway, that's just me.
Hmm.
Hopefully, other people are a little different.
Well, that leads into another topic that I wanted to bring up was how are you getting deals done in today's market? This being early, mid 2023, Q1, Q2, and
Yeah.
so there's a lot of uncertainty. So how are you doing that today?
Um, we're looking for opportunities where there are opportunities, and I mean, news as of like 20 minutes ago, the Fed just raised rates again today. 25 basis points, right? So we've gone from rates at ridiculously low, and like I said, 2019, I didn't realize what opportunity was there, but we were getting rates in the threes at a time. But right
Hmm.
now, I mean, the federal funds rate is 4.75 to 5, right? So most of your interest rates are going to be north of that because that's kind of like the bottom. So one thing that we are looking at is where there's still value, and there. Speaking of the 2019 to 21 time period, there were a lot of interest rates that started with a 3 or even a 4 that right now look really attractive, and a whole bunch of commercial real estate loans are assumable, meaning that a buyer can just take over the seller's loan. Okay, um, so that's one thing that if you can find a property that has an assumable mortgage with enough time left on the clock, you can assume a mortgage and get a 3% rate or get a 4% rate. And that really will help make things work. Something else I found is, as much as I want to operate in the 100 plus unit space, I've been seeing a lot more deals come across my desk in the 20 to 80 space. Yeah, so if you look at the deals that I've done in the last little while, I was co-GP on a very large property, 300 units, but the ones that are on my plate right now are in that 20 to 100 range. And yeah, so it's just a different, yeah, it's a different opportunity, and it's just going where opportunities are.
Hmm. I like that, and I think I've realized that lately for myself too. Is that I've had a box that I've
Mhm.
kept myself in, and it's the apartment box. And anyone can have their own box, but I wanted to make apartment investing work so much. And last year, we were blessed to close 5 assets in 12 months. And so we were hot, moving and shaking. And then the Fed started raising rates. And so things changed, and a lot of apartment opportunities dried up because sellers want, over the moon offers for where the market is currently. And so the transaction volume has declined. And so I still wanted to be in my box.
Mhm.
But I think you made a great point is that, if you want to be in that 100 unit range, whatever your goal is, whatever your box is, you might need to get out of that and just really look at what your big goal is. And if it's just buying apartment buildings, then that 20 unit, 80 unit deal might still get you to where you want to be.
Yeah. And it's just changing, and then there's a couple of things that contribute to that. I mean, the interest rates somewhat contribute to that, but it's been a little difficult. It's been a little bit difficult raising capital right now. Because of the economic news, because of the uncertainty. There's a lot of people that are a little bit reluctant to invest. 2021, 2022. I mean, early 22. Well, let's just stick to 21. Forget I said 22. But in that cycle, I mean, cryptocurrency was going crazy. The stock market hit all time highs, and there was kind of a euphoria around investing, and there was a lot of money out there. With crypto where it's at right now, a lot of people don't have as much. You can't sell your Bitcoin anymore and make a huge profit. You can't go out and sell as many stocks out of your portfolio and just have that extra cash. So, part of it is just where the market is today, but part of it is there's not that euphoria around investments. There's more of a kind of a gloomy economic picture. And so when I start looking, I use a syndication model. I raise capital from regular people, and we use that to buy our properties. But so when you start looking at how much I can raise now versus how much I could raise 2 or 3 years ago. It's actually less right now. I may have more investors in my database, but like I said, a lot of people are clinging to their pocketbooks. So yeah, I think when I started looking at the whole picture and where things are headed, that the smaller deals make sense for a lot of reasons. And I don't know how long we're going to hold them. We usually project 3 to 5 years on most of them, but we'll see how it works out. But right now, the numbers are penciling on these smaller deals. We're getting in at 65 to 75% leverage at a 3% interest rate, and those deals right now are working.
And that's assumable?
That's assumable.
Yeah.
Yep.
Okay. Okay.
Yep. But with the
And
non-assumable debt, it's I got a quote yesterday at 9.9% interest on a bridge loan. It's just like don't want to
yeah,
do
that's
that.
hard to stomach.
Yeah.
Yeah. And it's funny. An operator that I know, he early 2022 had bridge financing on a 200 unit apartment for
Hmm.
3.25. And
Hmm.
it's like, man, fine.
Yeah.
Like, and so it's just crazy to think about where it was. But
Yeah.
I want to talk about something else where I don't hear a lot of people talk about it, and it's how syndicators make money.
Hmm.
And, there's acquisition fees
Yep.
and cash flow, distributions usually take 6 to 12 months in some offerings, and every deal's different. But for you, how do you actually make income?
Yeah. Um, the syndicators, the model that a lot of people use, there's a big incentive to sell. And that's why a lot of people who bought in 2019 were selling 12 to 18 months later. Because how does a syndicator make money? You make money when you acquire properties, and you're typically making money when you sell. You know, most people, if you most operators, if they're offering a preferred return, they're actually not able to catch up to that preferred return until they sell. So, if you look at how syndicators make money on your average vanilla syndication, your 3 to 5 year hold, The answer is when you buy and when you sell. Acquisition fee, and then the seller or the GP carry or promote or whatever you want to call it, the ownership interest when you sell. All right. So I think that's doesn't align with every investor. I mean, the investors who are looking for growth and a quick return on their income, that works well for them. But something that, I just hired an acquisition guy earlier this week, and what we're going to be offering to our investors is a longer term hold with a little bit more cash flow. So with that particular model, I can actually build up cash flow for the operators, and I can build up cash flow for the investors. And what that model is going to look like is, yeah, we'll still get an acquisition fee when we close, and then we're going to find a place where we can refinance and return 100% of investor capital. In some markets and some opportunities, that might be 2 years from now or 2 years from when we close, and some, it may be out to 4 or 5 years, depending on where the market's going, where rates are at. But when we refinance, we're just going to do a straight split in cash flow. And so looking at that, how do syndicators make money with that one? Obviously, there's the acquisition fee at the buy. When you do the refinance, there's another chunk of money that comes in. It's not nearly as big as what you get when you sell a property, because there's still a lot of equity in the property. But from there on out, like I said, you're creating a longer term income stream. And if you've got your own money invested in that deal, that stream can get to be pretty substantial, especially when you start stacking, property over property over property.
Mm-hmm.
So,
and Brian, the capital transaction fee, from my understanding and my experience, so what you're saying is whenever you refinance, usually it's whenever you're able to return 100% of the investor's initial investment, that's when you get a fee. Usually it's 1%. That's what I've seen. And that's what you're talking about there. Is that right?
Actually, that's not what I'm talking. Yeah, there is a capital transaction fee, and typically that's in place to compensate the GPs for the time and effort it takes to do a refinance. All right, It takes a lot of time to do a refinance. But if you're returning, so the way it's set up, once you return 100% of investor capital, everything past that is the straight split. So let's say you've got $5 million in capital and you do a refinance and you're able to pull out $6 million in refinance money. The delta between that 5 and 6, that $1 million, gets split at whatever the split is. And so the GPs will make money at that point from the refinance proceeds, anything over and above what you give back to the investors. And since it's a refinance, it is not a capital event. And, oh, by the way, not taxable. So,
Okay. And that's great. So it's a waterfall essentially. And is there still the pref after the refinance?
no, I mean,
Okay.
the pref is essentially 100% until we pay back the investor capital. All right. So it's not really a pref. It's just, the investors get all of their, as soon as the investors get all of their money out and all of their investment equity is out of the deal, then you just have a straight split. So,
Okay.
and from there, I mean, we can build in waterfalls after that, but, we're going to start with just a straight split and see how that goes. And we may put in some other hurdles, based on equity multiples later on. But first couple of deals we do with this model is just going to be straight split forever.
Okay. And let's talk about Tribe of Titans. Really, what is that, and what's the reason you started that?
So the reason I started it, and it's taken a good 3 or 4 years to get here. I mentioned I wanted to be a teacher at one point, or a college professor. I've always enjoyed giving back and helping people, especially with teaching people what I have learned. And so when I first started, I was always trying to look towards the people who were just a little bit behind me. And quite frankly, I think I enjoyed the calls with people who were asking me, how I was doing what I was doing and asking for advice to do it. I think I enjoyed those calls more than I did with the people who were asking, how can I invest 50, 100, $200,000. But yeah, over time, what I started doing is when I'd get somebody ask me the same question 2 or 3 times, I would write up my answer. And at first, I was just keeping it in like a Google Drive type thing. And that way, when people would ask me questions, I'd already thought about the answer and I could give them a good answer. But over time, I started collecting a whole bunch of, you know, FAQs, and that turned into a why don't I, find a place where I can put all this information and make it accessible to people. All right. And that's how the tribe was born. The tribe's been around for about 2 years. Um, and it's grown quite a bit from just here's the repository of information. Last year, I did a couple of group coaching cohorts, which went extremely well, I think. And I just brought into the tribe a full year on coaching program as well. So, yeah, so it started out with me just liking to answer the questions. Hey, how do you do what you're doing? How could I do with that? How could I do X or Y or Z, or what advice would you give me? It started from answering those questions and answering those questions over and over and over again.
Mm-hmm. Hey guys, if you're enjoying the content of our podcast, but you have additional real estate investing questions, I'm happy to answer those questions for free. Head over to redseacapitalgroup.com and book an appointment with me. Not only am I the host of the show, but I am actively buying and already own properties across the US. So feel free to schedule a time that works best for you. Visit redseacapitalgroup.com to book your appointment today. And moving towards the podcast, I love your show. Again, you have about 400 episodes now, and it's I'm sure we'll talk about how it's different from everyone else's show. But what's the reason you started that?
It's the same reason I started the tribe, and the difference is I bring an aspiring investor on. And 2 days ago, Caleb came on as an experienced investor, and we had an aspiring investor ask questions, and so what that podcast is able to do is answer people's questions who are trying to get into the business, and they have two people with experience who can answer their questions. I think when I first started the podcast, I wasn't that experienced. I had just closed my third deal, and there weren't a lot of questions that I could answer. But now, after running the podcast for almost 3 years, yeah, it's the same thing. I wanted to help that same demographic, that same group of people. I call them the aspiring investors, the ones who want to get into real estate investing, but were kind of like me. They either didn't have the mindset, they didn't have the coach or mentor that they needed to get in. And so we provide a little bit of that. We record it and we release it as a podcast episode.
Okay. And I've seen so many podcasts come and go. They get to episode 50 and they do one once a week, or even episode 3 or 4, and then it starts to dry up. So how have you been able to keep the consistency going to this many?
I enjoy it. It's like I said, I enjoy talking with aspiring investors. It's something that, if you looked at my calls today, it's just afternoon my time, and I've had 4 calls with people who are aspiring investors. 2 of them are my coaching clients now, but still, I enjoy it. I enjoy the format. I enjoy talking with people. We do release 1 episode a week that's a monologue, and we release them every Wednesday, and I record them on Tuesdays. And I have a really good podcast editor that will text me at 3 p.m. on Tuesday if I haven't finished recording it yet, and saying, Brian, where's that episode? But yeah, a lot of times, like when I'm looking at what that monologue should be, what I should talk about, a lot of times I go back. I go back to what are the questions people have been asking me in the last week. Okay, what are the aspiring investors concerned about? What are they struggling with right now? And that's where I come up with the answers. So In the podcast, those multifamily brief, those short, me just talking episodes, are very similar to the like when I would write up questions to people's, write up answers to people's questions. It's literally the same concept.
Mm-hmm. Mm-hmm. And I want to go back a little bit to the syndication route, and you've partnered with several different groups, several different operators as a co-GP, and there's some that you haven't worked with, and there's some that you're currently working with. So, how would you recommend partnering with someone and making sure you guys are the right fit?
For me, it's kind of a gut feeling. It's and my gut's been wrong before. I probably should have some better metrics, but when I first started, I had a partnership that we were exclusive to each other. Um, and one thing that I didn't like about that partnership, I mean, I'm talking to a lot of people every day who are in this business, and like I said, it's something I enjoy. One thing I didn't like about that partnership is I had to ask their permission to partner with other people. And
Mm,
so it's just one of those things. And I left that company about this time last year, but yeah, I mean there's a lot of people that over time, most people that I've partnered with have been on my podcast before. So we start a relationship, we start talking, we have a call here, someone comes on my podcast, we have a couple more calls, and then finally they call me up and say, "Hey Brian, I've got a deal. Is this something you'd like to partner with me on?" And usually by the time we get to the point to where um, they have a deal, there's already some sort of a relationship there. And in those cases it's really easy. My criteria very loose, and like I said, I should probably codify this a little better. But my criteria is I've got to like the people involved, number one, and I have to like the deal. And
mm,
so that's kind of what I look at for partnerships. Now, I will say that I'm always open to partnering, but I also just hired somebody to be my own acquisitions guy, and so I'm gonna be. I always have a couple irons in the fire. Like I said, I enjoy teaching people how to do things, and a lot of times that turns into partnership opportunities, and I'm open to that. But a lot of my focus is going to be on finding my deals in Salt Lake, or making sure that my acquisitions manager is finding deals in Salt Lake, closing on those. So at the same time, I'm trying to build a company that's going to be a very well-oiled machine in acquiring, managing, and paying investors off for many years to come.
good.
Yeah.
Well, Brian, let's go ahead and move into the final three questions. And the first being, if you could recommend a book to our listeners, what would that be?
My favorite book, it's a religious one, and since you didn't narrow me down, I'm going to say the Book of Mormon.
Hmm.
I'm an LDS guy. I've spent it's a book that I've read more than any other book in the world. I've probably read it cover to cover 20 or 30 times. So that's the number one book.
Okay. And number two is if people want to learn more about you and your story, potentially invest with you as well, where's the best place for them to do that at?
LinkedIn is probably the best place to reach out to me. Um, if you want to invest passively, the best thing, the website is streamlinecapitalgroup.com, and that's the best way. If you just want to join the tribe, it's thetribeoftitans.com.
And the final three question, Brian, is if you can share one final thing with our listeners that they can take away from today's show, what would that be?
You don't have to do it alone, is the answer. And I actually posted something about this last week on LinkedIn, and if I didn't mention already, I'm very active on LinkedIn. But when I've looked back at what has made me the most successful and brought me the most growth, it's been partners and mentors. Okay, so you don't have to do this alone. Find a partner, find a mentor, and you're going to go much further and much faster with other people around you. So you don't have to be a lone wolf. Um, find somebody that can help you and stick with them for a while.
Well, Brian, thank you so much for being here. I have really enjoyed our conversation, just your expertise in the industry. And I know you've shared a lot of knowledge bombs with us today. So thank you for being here.
Yeah, perfect. Hey, thanks for having me. Appreciate it.
And everyone, I hope you have a good day. We'll catch you next time.
It's time to grab your victory. Find us on the web at redseacapitalgroup.com and follow us on Instagram and Facebook at Red Sea Capital Group.